Crypto Hotep here with another investing video. We're on week 115 of the family portfolio and dividends tracker. I really appreciate you guys for tuning in again for another weekly update. If this is your first time watching the videos here, feel free to go to my channel right here. Go to the subscribe button, hit the subscribe button, and also hit that notification bell. And that way, every week when we do these updates, you'll get a little notification. Everybody that's been down since week one, I thank you and I appreciate you for that support, as well as my new subscribers also. Before we jump in here, and if this is your first time watching the video, basically, during week one, during the first, I would say, section of these investing videos, I gave my family a short list of stocks to choose from. Actual individual stocks, and they proceeded to pick the companies that most resonated with them. And then the broker we use is M1 Finance. We still use M1 Finance. I vouch for M1 Finance, and I believe they're one of the most underrated brokerage firms ever. So there is a link if you don't have an M1 Finance account and you want to. Feel free to use the link. Again, support the channel. But more than halfway through this investment journey, I thought of the idea of switching strictly to ETFs for my family, just for the sake of simplicity and still being able to build wealth. And that's the biggest thing. We want to build generational wealth in my family, and we're doing it in this portfolio, in this small portfolio. And we are tracking the portfolio week in and week out, no matter if it's a good day, bad week, whatever. And then we're tracking our emotions, tracking how we feel, and just how that portfolio is growing. If you want to see how far it's grown, go to week one again. You'll see the beginning balance there. So before we go to week 115, let's go to week 114. And before I forget, this is financial advice. Just because me and my family invest in certain ETFs, that doesn't mean you need to. Please do your own due diligence, guys. But week 114 saw us with a balance of $4,415.03, money weighted rate of return of 3.99%, market gain of $129.22, and then dividends earned of $32.52. So what happened this week? Well, we have Iran and the U.S. still going at it. It seems like, it's red, green in terms of the days in the markets, because one week or one day, people want to talk about a peace deal. The other day, hey, U.S. is attacking Iran, and so forth and so on. So again, that's why we're long-term investors here. We can't stick with the volatility of these markets every single day. That's how you get chopped up. That's how you get wrecked. Okay, so we're more on the long-term side. And also this week, we also had CPI come out, and CPI did come in lower, which is bullish for the U.S. So CPI did come in lower. Do we think that number's made up? Possibly, yes, but it is what it is. But that did get overshadowed by Trump's speech that he gave to the U.S. in regards to election integrity, and then also the constant Middle Eastern tensions that are going on. So let's see what week 115 saw us with and what that balance is. So week 115, and again, this is a contribution week as well. Week 115 saw us the family portfolio with balance of $4,350.16. So we actually went down, and it was a contribution week. So that's how much the markets have been bleeding. Money weighted rate of return now is 0.77%, still in the green, but we are down, and that is year to date. Okay, market gain of a negative $1.12, and dividends earned still at $32.52. Let's hop over in the activity and see what's been going on from last week to this week. So again, as I mentioned, this is a contribution week, and we did put a little deposit in here. Again, this is your first time watching the video, Again, you're gonna have to look at the first video and maybe several videos after that. We don't put a lot of money into this account because we want to show that you can build wealth over time with modest deposits. So every 2 weeks we may put in 15 bucks, but then if we get a bonus or anything like that, if we're blessed to get that, then we will put some money in the account here. So here's our 15 bucks here. What did we buy? We bought some quantum. We bought Fidelity Consumer Discretionary Fund right here, FSTA. We bought some socks, some semiconductors, right? Some chips. So we bought some socks here, and then QQQM, the fan favorite. So we were blessed with a bonus as well for this week, which is a good thing, right? So what did we get? Well, we deposited 50 bucks, and then we went to town again. We bought more semiconductors with SMH, more quantum, doubled down on that with QTUM, and then more QQQ, and then more consumer discretionary. All these were in the red this week. So this was good that M1 Finance lined up our buys with what was in the red. I like to see that a lot. Let's go to our portfolio here, and as always, we go bottom to top, and at the bottom is my wife, unfortunately. And currently, the balance is sitting at $633.36. Money weighted rate of return of a negative 4.97%. Now, yes, that is negative, but we are actually closing the gap on my wife's portfolio, and I believe it's going to turn green potentially in the next month or two here. So my wife was down over 6%, and now we're down less than 5%. So all good things. And I think it's just, again, my wife had certain positions in individual stocks that were very volatile, and then we moved over to the ETF. So the portfolio still has some lingering feelings about those individual stocks. Market gain is a negative $35.29. Dividends earned is $4.89. And as always, we have the fan favorite here, QQQ. We are down 4.36%. Again, markets have been pulling back, and tech has been bleeding out this week and the middle of last week as well. So you got to keep that in mind. Consumer staples, FSTA, is good, and we're up there. Why? Because FSTA is seen as a very defensive type of holding. What does that mean? Well, a defensive holding basically means that it steers away from very volatile assets like tech, like quantum computing, semiconductors, chips. It doesn't do anything, it sticks to the basics. So consumer staples is seen as a safe haven, if you will, in terms of asset holdings. So of course, when tech is bleeding off, when consumer discretionary is bleeding off, the consumer staples is shining because that's what is quote unquote safe right now. Okay. Consumer discretionary, again, think of it like when you have a lot of money, these are stuff that you'll quote unquote spend, waste your money on. And this is consumer discretionary. So companies in here are like Tesla, right? So you can just think of that. Tesla and some tech companies, these are in here. Okay, consumer staples, those are those old faithfuls, I call them. Those old faithful companies have been around for years. Okay, let's go to our youngest. Our youngest has a balance of $662.71. Money weighted rate of return of 3.7%, 3.70%, I should say. Dividends earned of $4.10, and then market gain of $17.71. Again, QQQ is going to be bleeding for everybody out here. Consumer staples shining bright, over 2.5%. Consumer discretionary down, and then surprisingly though, video games are up here in ESPO. Video games are up in the green along with consumer staples. That is very surprising. Let's go to our middle. Our middle has a balance of $673.03. Money weighted rate of return of 10.89%. Very good. Market gain of $55.53. Dividends earned of $5.30. So again, QQQ following the premise down, but consumer staples up. consumer discretionary is up on this Vanguard, which is very surprising. And I believe one of the reasons why it is because this has less volatility than XLY, which is the State Street version of consumer discretionary. So very interesting to see that. Espo, video games is up just like in our youngest. Okay, let's go to my stocks. My stocks are taking a beating right now, and that is because I switched my thought process in my portfolio to invest in quantum computing, semiconductors and chips, and cybersecurity and cloud computing. So basically all tech, and if tech's bleeding out, my portfolio is doing a number. So I am down over 5.29% in the negative. Balance is $1,156.94. Market gain is a negative $71.63, and then dividends earned of $10.04. Excuse me. So when we talk about the volatility, this is what I meant. Like when I switched over my portfolio, excuse me, to this portfolio with these ETFs in particular, I knew we were going to have days like this. Days like this where you're going to be down 5, could be 10% too next week if this sell-off continues. But you just, again, my vision for the future involves these ETFs and the companies within these ETFs. So I am okay with holding this. So we have stocks down almost 9%, SMH down almost 7%, and then cloud computing down over 2.5%. Surprisingly, cybersecurity is up over 7%. That's interesting. But quantum, with quantum computing, QTUM down over 10%. So you got to ride the wave, right? I still believe in my portfolio, and this is just something that I agreed with, and I already knew was going to happen with just this volatility. Let's go to our oldest, and our oldest has a balance of $1,224.12. Money weighted rate of return of 3.59%. Market gain of $32.56. Dividends earned of $8.19. So very simply, QQQ bad, FSTA good, XLY bad right now. Again, you're seeing a pattern though with the defensiveness of that portfolio, and that's one of the reasons I think you should diversify a little bit, so then that way your portfolio isn't fully dragged down. The reason why I'm not fully diverse and I have mostly chips, quantum computing, cybersecurity, and such is because I have other investment vehicles within M1 Finance here, that I use, where I just felt as though my portfolio and our family portfolio deserves to have a little fun. So, and the rest of my portfolios don't have this. So that's why my portfolio and the family portfolio specifically has those ETFs and how I feel about them. But as always, guys, thank you for tuning in for week 115. The family portfolio sees a balance of $4,350.16. Money weighted rate of return of 0.77%. Market gain of negative $1.12, and dividends earned of $32.52. If this video was helpful, guys, feel free to like, subscribe, comment. Let me know what ETFs you are investing in. And as always, thank you and happy investing.